All right, good evening, guys. Welcome, welcome, welcome. It is nice to see so many of you here already, and boy oh boy, the the chat section is already really really busy. So, thank you so much for being here. Thank you for attending this live session. Now, before we get started, guys, I'm going to jump into the questions in a moment, but I've got a couple of things that I just wanted to get out of the way very, very early on in the stream. The first one, if you recall, maybe over the last couple of weeks that we've done these, last 4 weeks that we've done these, I mentioned that we are going to have a specific live session in March about a particular topic, and that topic is going to be pensions. Hang on one second, let me just make sure I can get this light in right, because it feels a bit dark in here. So we're going to have a session that is going to be specifically dedicated to pensions. And for that, we are going to be partnering with PensionBee. So PensionBee are a provider. They're a digital pensions provider, essentially. So we're going to have Martin from PensionBee actually come along. We're going to have a discussion about pensions, and we'll also take some questions from you guys live as well about pensions. So if you are kind of unsure about pensions, whether pensions are worth it, and let's face it, people are very, very skeptical about pensions these days. Is it worth it? Is it not? Is it restrictive? Is it not? This is going to be a great opportunity for you to maybe learn something and ask questions as well. So it's going to be specifically about pensions. Pensions are something that I hold very, very dear to my heart, because I've mentioned a couple of times, if you follow me on Instagram and across other social media channels, that my dad, he was panicking about not having a pension at age 58. And it was one thing that I remember him talking about quite depressingly because he realized that he didn't plan for a pension until way, way late. And actually, he died at age 17. He was still working, even though I know that he really wanted to retire in his 60s, but he just couldn't afford to do so. So something that's very close to my heart, and something that I do talk about often, and something I think this session will be really, really good for. So that's the first one out of the way. The second one is this, and this one is actually really, really exciting, and this is where I need your guys' help, really, and your assistance with this will be massively appreciated. I have been nominated for the Online Financial Influencer of the Year award by the British Bank Awards, essentially. So by voting for me, it requires voting, guys. By voting for me, you actually get entered into a prize draw to win £1,000. I've just realised that I don't actually have the link for that available. So let me just grab it really quickly. It's in my inbox. I will grab it for you. But like I said, by you voting for me, you actually get entered into a prize draw to win £1,000. So you could potentially win a bit of money. You could also help me win an award as well. To be honest, I am in very, very good company. Some of the guys that are also nominated in this award have been doing what I do now for a good number of years. There's one guy in particular who has a really, really big podcast. It's probably one of the most popular, if not the most popular, financial podcast in the UK. And to be honest, when I first started out, I was researching whether I wanted to do this last year. He was one of the people that I watched for months and months and months. So just to be in the same nomination category as this guy is, for me, absolutely amazing. But I'm just going to pop the link in the chat box, in the chat section right now. Please feel free to vote for me using that link right there. So those are announcements out of the way. There's already quite a few messages on here, so let's get cracking with this. We're going to give it a good hour, basically. Again, if you want to fast track your question, if I don't get to it, if you want to fast track your question, you can super chat as well. And that will basically ping up a notice, and I will make sure that I read that and fast track that for you as well. In addition to your contribution, it will just be a way for me to say thank you to you. So, Novice Guitar, hey Pete, what's your thoughts on a market crash / correction happening soon? And will you still be looking for stocks / holding your current investments through the storm? Thanks. Yes, I will be. If the market does crash, then I will still be holding my investments. I will probably actually throw more money in, if I'm completely honest. So do I think that there's going to be a market crash? Possibly, yes. There are a lot of factors that go into this. What's going to happen with COVID? Are we going to have enough vaccination and tolerance within the population? Are variants still going to be popping up that could derail the vaccination focus? Are we going to be able to just get back to work as usual? Those are all big questions that we don't know the answer to. I think if you're investing right now, it's probably best to assume that there is going to be a crash, that there is going to be some kind of correction this year. If it happens, then at least you're prepared for it. If it doesn't, then at least you're riding the wave up on the markets. But looking back at the FTSE 100 over the last year or so, February or so last year, the FTSE 100 was at 7,000. I've got a graph up here, was at 7,403. The FTSE right now is at 6,624. So we're still quite a bit off the high. If you look at the S&P 500 though, the S&P 500 is actually higher than what it was 12 months ago. By actually, what was this? This is 3,300 or so, the S&P, and it's now at 3,900. So, you know, you can argue that markets are... Actually, no, hang on a second. Let me just make sure that that's right. Am I looking at this right? 1 year. I need the 1 year figure. Yes, so 3,373, and the S&P 500 at the moment is at 3,906. That's due to obviously a lot of intervention by the US government. But, you know, will a market crash happen? Possibly. There are lots of factors that go into it, but I will definitely be holding my positions. I'll probably be buying more if it does happen, because a market crash is a perfect opportunity to pick up a lot of stock at a discount. So cheers for the question, Novice. So here, hi Pete. Does the 20,000 ISA allowance per year limit apply to account cash deposit withdrawals or buying and selling stocks? Because if it's the latter, you would be reluctant to sell stocks due to losing tax exempt status. I'm not really too sure that I understand what you're asking there. Let me just... So the £20,000 ISA allowance, I think I've got what you're trying to allude to now. The £20,000 tax allowance essentially applies to your deposits in an ISA account. So whether that's a cash ISA, a stocks and shares ISA, it's still the £20,000 limit. Now, if you hold money in, say, a stocks and shares ISA, for example, and you go and sell those holdings, then you're effectively leaving the ISA wrapper, the ISA account. So if you take it from an ISA and go put it in a normal account, then obviously since it's landed in your normal account, it's going to be taxable from that point onwards. So what most people do is they hold their ISAs for a number of years, and they end up drawing an income from their ISAs, because income from ISAs is also tax-free. So you have the benefits of that within that. I hope that answers the question. I think it does. If not, if it doesn't, let me know. Kiki, hi Pete. What are your thoughts about space stocks, Holly City, Gilat Satellites? If space exploration is future, can it be the next Internet of Things, or is it too early to invest and just sit and wait? It depends on what you mean by space exploration. If you're talking about what Blue Orbit and SpaceX are doing, then no. But if you're talking about proper, I don't know, maybe Virgin Galactic space tourism, possibly. I think with all of these things, it's very, very important that you understand what the definition is. What are these companies actually looking to do? I mean, I know Elon's talking about going to Mars, right? What's it? Big Hefty or whatever the rocket's basically called. He's talking about going to Mars, but that's still realistically a good number of years off. Can you invest in SpaceX right now? You can't. So any new companies that are coming up, any new stocks that are now coming up, I would seriously be researching what they actually have to offer and what they're going to bring to the table. You know, building rockets and starting out with this is really, really it's expensive. It's cost intensive. So what do they bring to the table? How are they going to basically push space exploration? Can they actually compete with the likes of Tesla, who, you know, they are obviously going to space and getting payloads out there. And you've also now got, what's it called? The internet service, which I've been seeing videos on this week. How are they going to compete? That would be the big question that I'll be asking and researching about those particular companies. What is their plan? What exactly are they going to be doing? And then you need to have a look at it holistically around, you know, who else is in the market right now? Competition. What is their unique selling point? What is their what is their USP? How are they better than SpaceX or Blue Origin, for example? These are the kind of things. Is it too early to invest? Possibly. It's a new frontier for everybody. I mean, to really think about space exploration. I mean, you many people in that quarter will argue that we're not even anywhere near close to the kind of technology that we need. So it depends on what they mean by space exactly. Is it launching satellites? Is it launching payloads? If it is, well, SpaceX have already got the run on people there. So what are these new guys going to bring to the table that will compete in that sector specifically? Hope that helps, mate. Bobo. Hey, Pete, do you think the stock shares ISA allowance and possibly CG allowance will both come down drastically this year? Thanks for your invite. You know what, mate? We were talking about this in the members group earlier. I think it's well, we don't know for certain, but I think CGT, capital gains allowance, capital gains tax and capital gains allowances, that's going to see a change. Whether they'll do something on the ISAs, I don't know. Because if you think about it, right, what he'll be looking to do is changing things that will mean that there's a tax take. If you reduce the ISA allowance, they won't do it retrospectively. So they won't say, oh, by the way, you have you've got X amount in now saved up in ISAs for the last 2 years, say 40 grand. We're going to reduce the limit down to £15,000. So now the £10,000 excess that you have in your existing ISAs are now taxable. They're not going to do that. I mean, they'll be very, very brave to do that. So what realistically can they change? They can change the allowance. So if they brought it down from 20,000 to 15,000, that doesn't result in any immediate tax break or tax take, because essentially you're still saving money tax free. And as long as the money is inside an ISA wrapper, it's still completely tax free. What I do think he'll go for, though, will probably be CGT, because it means that if the allowance is 12,300 right now, then you have the ability to take an immediate tax take by reducing it, say, down to, I don't know, say £5,000, for example. Because now anything that you sell and have a gain on beyond £5,000 becomes taxable at said rates, depending on obviously what the rates might be if he changes those. Whereas if the limit was £12,500, that gate to actually have a tax take is higher. So I think he'll probably do the CGT. There's talk about him doing some clawing back some inheritance tax threshold, so probably increasing the inheritance tax rate, or maybe reducing the threshold. That would be hugely unpopular, massively unpopular. So I would imagine he'll probably do an IHT rate increase, but I don't know this for sure. It's all going to be speculation. We'll find out, I think, in probably 2 weeks time, roughly around about then. But I think CGT will definitely be on the table. They've alluded to that for quite some time, since October last year. So I think CGT, capital gains allowance, will be on the table. Right, thank you so much. There's a super chat here, so let me just see what question we have right here. Thank you, Snuggles. I'm sending you money because I see no one else sending you money. No, really do appreciate it. Maybe it's back you're dark-skinned. Keep up the great work. I am learning. Thank you, mate. Really do appreciate it. If that was a question, I would answer that question straight away, but really do appreciate the contribution. It does help me out with the channel as well. Let's see what we've got here. Kiki, I think this is a follow-up. One more question. You said that you invested in Tilray. What do you think? How close is cannabis legislation in the USA? Could it happen before November, December? I don't think so. I think the Senate and the House is too close. The Republicans don't want it to happen, and I think they would need to win more seats in order for them to be able to pass that without too much opposition. So will it happen November, December? If it does, it would be amazing, because I think that the cannabis companies and stocks that I hold right now would just soar, but I don't see it happening November, December. Like I said in the video when I spoke about this stock, I bought them pretty much to hold for 4 years for the first term, because I think ultimately, if he is able to do it, and he is able to do it in the first term, then even if it's 1 year, 2 years in, you'll see the benefit in the stock price. But will it happen in November, December? It would be great if it did. I just don't think it will. I think there's a little bit too much opposition on the Republican side, and I think they will need to win some more seats in the midterms if that is going to happen. But the political scene out there right now is just so divided. You just you, it's anyone's guess what's going to happen with the Senate and the House. Let's have a look. Novice, do you think a market crash will happen soon? If so, do you plan on holding your investments or selling? I think I've already answered that, mate. I don't think, well, there could be a market crash soon. Nobody really knows. We all knew that we would all invest at the right time, right? Absolutely don't know at this point in time. But even if the market did crash, then I will still be holding my investments regardless. I'll probably buy more because, you know, a downturn is always an opportunity for you to buy stuff. It's like, you know, trying to get stuff on discount. It just makes sense. Victor, hey, thank you for your awesome work on this channel. What is your general opinion on the market right now? Do you see a great time to invest or a big selling stage, not trying to time the market? I think whenever you're talking about investments, it's always a good time to invest because, you know, it is impossible to time the market. The thing that matters is time in the market, not time in the market. And, you know, you have to be on the field of play to have a chance of winning. If nobody turned up for their football matches, right? I mean, I'm a United fan, so, you know, we start late, concede early goals, like stupidly, right? But if you don't carry through to the second half and play your heart out, you're not going to win that match. Today is a prime example, 3-1 Newcastle. Go up, concede one, right? You have to come out in the second half. You have to be involved in that game. If you're not involved in the markets, there's no way that you're going to participate and actually gain from it. So I think it's always a good time to invest in the market. Yes, you need to understand the risk because obviously that is key. Whenever you're investing, there is going to be that inherent risk. But as long as you're investing for the long term, you're not overextending yourself and you understand how things work, then you're going to be okay. It's just a case of just enjoying the ride and having a plan that's actually going to see you through to your goals. And I talk about goals all the time. You have to know why you're investing in the first place. If you're buying individual stocks, you have to know what your exit plan is. At what point are you likely to exit? What might make you exit? Same thing with investing in index funds or ETFs or in the market. What are you doing it for? What do you want to achieve? What is your plan? And being able to have that discipline to continue to do this regardless of what the markets say or do is very, very important. So I will definitely, you know, be looking to invest more if the markets crash. I'm already invested right now. I'll just continue to do so because I'm investing for the long term. V-Day, hey Pete, thank you for all the good advice. You're a real one, thank you. I've helped to buy ISA and planning on moving to a lifetime ISA. Should I still keep paying into the help to buy ISA? Yes, you can, because you can still transfer the full amount into your lifetime ISA. Actually, you're going to get some benefits from lifetime ISAs moving from a help to buy, because for help to buy, the maximum you can pay into an help to buy is £12,000. So with a lifetime ISA, you're not capped. You can only pay in obviously £4,000 every single tax year, but if you hold it for 4 or 5 years, then you can accumulate more money. And you can do that over the long term as well. So there's not, yeah, you can still pay into your help to buy ISA. If you're doing a transfer, you'll still be okay with the ISA rules in that regard. But I would say, you know, if you have chosen a provider already, just make sure that you have a conversation with them to let them know exactly what you want to do. Just in case I've missed any nuances. I don't think I have. I'm pretty sure that I haven't, but speak to your provider anyway. Okay, D10. Which trading platform would you recommend to use for trading? I don't trade, so I can't tell you which trading platform to use. There are a couple that come to mind immediately. Obviously, you can trade on the likes of Trading 212. That's an obvious one. They're not opening accounts right now. There's one that I reviewed which has bank account investing and trading in one place. That's Fineco Bank. They're a really, really good one. They give you like their Power Desk, which is their trading tool. That looks really, really good. And I think you could probably do a little bit of trading on eToro as well. So 3. I mean, a lot of people use IG, MetaTrader 4, those kind of things. So I know about those platforms, but I don't necessarily trade myself. So, yeah. So Dick, how you doing? Welcome. You go, Kevin, buy a lamp, bruv. You know what? I've got these dimmable lights, and sometimes I just don't set them right. I do need to get some stuff in the background now. Steve, hey Pete, where would you invest yourself? Where would you invest yourself ISA allowance? All right, where would I invest my ICE allowance? Money Farm or Vanguard, and why? Thanks for the great content. Okay, so Money Farm and Vanguard are different. So Vanguard would be great if you want to essentially go and pick your own fund and you want to go and manage it yourself. Then if that is you, Vanguard is great. Very, very low cost. You can pick up the life strategy funds for like 0.22%. You can pick up some ETFs for like 0.07%, 0.45%, depending on what you're looking for. You could probably pick up some active stuff in there as well for about 0.45. You have to look at the range that they have available there. That's if you want to be active and do it yourself. If you don't want to do that and you would rather just like outsource it to somebody and let someone just do it for you completely without you having to worry, so you literally just set up the account, forget it, then Money Farm would be the one for you. They're not the same thing. With Money Farm, you get active management as well. So you get a team of people who are constantly looking to move things around and make sure that they take advantage of things. Like I said, I've got a little bit of my money in their general investment account because I really like what they do, particularly when it comes to the fact that you can actually pick up the phone and actually speak to somebody and get some guidance. You're not going to get that with Vanguard. Like with Vanguard, you've got to read the fun fact sheets. You need to know what you're looking at, and you're on your own. You've got to do it on your own. Money Farm takes it one step further. It's active management. They allow you to then basically pick up the phone, book an appointment with one of their representatives, and talk through what you want to do. It's really, really easy to use them in that regard. So they're not the same thing. They speak to two kinds of different investors. So depending on which one you are, depends on which one you would use. Who would I use? I've got my money with both of them actually. I've got Vanguard and I've got a Money Farm. I've got Money Farm because number one, I wanted to review the service for you guys. So I wanted to make sure that I actually liked it. I do actually like it. The performance is pretty good. One of the articles said that they actually outperformed Hargreaves Lansdown when they looked at from 2018 or so up to date. Outperformed some of the big players. So performance pretty good. I've got both. Valentas, hey, thank you for the info. Let's have a look. Appreciate it. What's your opinion? Where should first-time investors put their monthly investments, funds, ETFs? Really, really good question. Right, so funds and ETFs both offer you almost the same thing. So they both offer you diversification. They both offer you saturation in the stock market, which is always a good thing. Funds, index funds, specifically, can be more expensive than ETFs and they don't give you as much fluidity. So for example, with an ETF, you can trade that on a daily basis. It's a fund that is traded on an exchange. So you can get out of it at 10 o'clock on a Monday morning or 12 o'clock on a Monday afternoon. Completely fine. With an index fund, you can't close your position until the end of the day. So therefore, some people prefer it because it gives them the ability to be a bit more fluid with their investment choices and decisions that they actually want to make. So they are both really, really good vehicles. I would definitely say that both of them are a great place for a first-time investor to begin, especially taking on board like a core satellite approach, which is the way I invest, which is mainly in funds with a little bit of money sat within individual stocks, so like Tesla, for example, and some of the other stocks that I've actually bought. Bobo, thank you so much for this super chat, mate. Really do appreciate it. Thank you. Again, if you want to fast track a question, because I know there's quite a few that I've not yet got to, you can do a super chat, and as my token to say thank you to you, I will actually answer the question as well. So let's have a look. I know there's quite a few here, so bear me 1 second. Let me just find out where I am. Where am I? Okay, I need to go back up. 1 second. Okay, you're cool. So V-Day, I know where I am now. V-Day, yes, pensions came at the right time. Will definitely join in. My mum will most likely join as well. And since we're tracking her old pensions too, perfect. That's great. So good. You should benefit from that session on the 7th. It will be really, really sort of useful and informative as well. Kevin, I'm still investing around £20 per week using the Roundup feature on Moneybox. You know what? The Roundup feature on Moneybox, I did a talk for Genuine Impact last week, and we spoke about some of the apps and how some of the new ones have introduced features that make it easy to invest. And that is the feature that I cited in that talk last week. The roundup feature is amazing. Just it's if you haven't used Moneybox and you don't know what the roundup feature is, essentially you can connect your bank account to your Moneybox account, and when you spend money on your debit card, it registers how much you spend. And then if you can, I used to do it every single week on a Sunday maybe, you can then have a look at your past transactions. So where you spent 20p, 80 pence, for example, you can round up 20p to a pound. And it's amazing how quickly you rack up quite a bit of money on a weekly basis just by rounding up the odd 10p, 50p, 2p here and there on transactions that you've made just during the course of the week. It's a really, really powerful feature. It's great. Paul Green, just voted for you. Really good channel. Everything explained well and clear, mate. Thank you so much. Really do appreciate it. Thanks for the support. V-Day, already got my vote for you sorted. Thank you very much. There's another super chat here. Novice, thank you. Thanks for your time, Pete, and answering my question. Videos help a lot, mate. I really do appreciate it. And thank you. Like, guys, like, I have a members meeting and the members were saying, you know, how they found the channel useful and stuff like that. And I have to say, like, at the end of the day, I only make the videos, and you know, there's a lot of time that goes into making the videos and doing this kind of stuff. But if you guys weren't watching, the channel would be nowhere near where it is right now. I mean, literally this week we'll cross 20,000 subs. I mean, it's mind-blowing to me because all of last year we grew by 11,000 subscribers. Like, for the entire year last year, we've done 9,000 subscribers in 2 months. I mean, I can't even start to begin to think where the channel's going to be by the end of the year, and the amount of people that will see videos, that will interact with videos, who may actually get benefit from this channel. I think of those numbers, and just looking at maybe some of my impressions, 2.2 million impressions last month. It was about 150,000 views last month. The numbers are mind-boggling, and I only produce the videos, but you guys watch and you guys share. So really, I owe it all down to you guys, and I thank you so much for it, because as the channel grows, I hope to be able to reach more people and actually help more people, and that's the whole point of this. So thank you. Steve, Pete, what's your side hustle apart from social networking activities? Thanks again. The way I'm set up at the moment is obviously attached to this channel. I've got coaching, I've got my courses and stuff like that as well. I do some speaking outside of YouTube as also. I haven't done a lot of it because obviously lockdown, so most of the time it's on Zoom. But other side hustles that I have, what other side hustles do I actually have that are worthwhile doing? I can't say that I have that many other side hustles, to be fair. I mean, I've got quite a few other bits that come as part of what I'm doing here. So, for example, I'm doing a little bit of work at the moment with some actual financial advisory firms on training. That's using some of my old skills from like back in corporate days. I've just been asked to do that last week, so there's a bit of work going on there. There's a lot of stuff stemming from the YouTube channel. Let's put it that way. But this is my main focus. This, the podcast, and just producing content beyond that. As part of the content stream this year, one of the things that I do want to do is start talking about side hustles, or how people can actually generate a little bit of extra money themselves. And the reason why that's important for me is because at the end of the day, I talk a lot about investing. And in order to invest, you actually need to have money. And a lot of people struggle with finding additional cash. So one of the things that I do want to do this year is start to bring in side hustles, how you can earn more money, how you can make extra money on the side. And one of the things that I'm going to be looking at is a partnership with a channel actually here on YouTube who do a lot of educational content on Amazon FBA. And they've got a ton of free videos teaching people how to spot and research products, how to photograph products, what kind of products do sell, don't sell. So that's something I'm hoping to bring into the equation on the channel this year. And hopefully, with that, if I can get a cohort of people, I'll actually go on the journey as well and start an Amazon FBA store and see how we all get on. But that's some of the things that I wanted to bring to the table this year as well. Bakushan, thank you. All best for the awards. Ashley. Now, Ashley, oh my God. Ashley is one of my old buddies from Canary Wharf. what do you think about MetLife unit link guarantees? Worth it, mate? So back when I was in Canary Wharf, we used to sell unit link guarantees, and essentially that used to work in the investment arena as investment bonds and as part of pensions, and it was a phenomenal, groundbreaking product. However, Brexit kind of put a whole stop to how the product ended up being delivered because it came too expensive with Brexit and the currency fluctuations that we saw shortly after that. But it's good to see Ashley on here because yeah, me and him we had some great times out in Canary Wharf. We really did. So great to see you, pal. Thanks for joining in, Dave. Old school, print more money. Yeah, well, I think you're probably thinking of the market corrections you're commenting there. What about ARK Investments? I think with ARK there, ARK with a K, if you're speaking towards Kathy Woods, Marilla, you know what? Kathy, I follow her on Twitter. And she is very well known for being very good. I was looking at her Geonomics. Was it Geonomics? No, it was the her Autonomous Technology and Robotics ETF. Just on Thursday, and I think over the last year it did like 106% or something like that. They are very good ETFs. She's very good actually, and she's very well researched as well. I have a lot of people ask me how can you buy into those ETFs. They're very difficult to get into. I mean, you can't get them on Trading 212 because they're not available. I'm pretty sure you can't get them in free trade. I'm pretty sure you can't get them in eToro. The only place that I know that you could get access to them was Stake. However, Stake has currently this, due to MiFID, they have to go through certain checks to make sure that you're an experienced investor before you can open and access that kind of investment. So the criteria is you have to have like, I think it's like £30,000 as a balance in your investment account in order to access it. So it's a little bit restrictive, but it's a very good. I've got a really big interest in the geonomics side of the investment, and I'm actually probably looking to replicate that in Trading 212 because you can do it. You can't do it with every single one of the companies because not all of them are available, but you can replicate that ARK investment portfolio in Trading 212. Not exactly, but you can replicate it to a degree. Backrash. All the best for the award, Pete. Which companies' stocks and shares, which companies' stocks ISAs is best to buy and sell stocks otherwise? Which company's stocks ISAs is best to buy and sell stocks otherwise? I'm not really sure what you mean, what you're asking there, mate. Can you just give me some clarification and I'll come back to it? Novice, thanks for your answer. No, appreciate it, mate. Thank you. There's one here from Sharon. What do you think of Plug? If that's a company not on my radar, there's quite a few. There's probably about God knows how many companies available on stock on the stock market. So it's not one that is on my radar at all. Fred, thanks, Pete, for your insights on money management. Is there a Bounty chocolate involved tonight? Mate, you know what? After making that video, I've still got most of them up there. I rarely eat chocolates. My missus has been digging into them more than anything else. But I do like my Bounties, so they're my favourite in a box of celebrations. What else we got? Bobo. They have an earnings call this week. This is Plug. Okay. I'm going to write them down because now that a number of you actually mentioned them, I will write them down and actually just take note of them and hopefully be able to give you guys a little bit of an insight when we next speak. Plug. That was from the YouTube live session. Okay, that's noted. Kirsten. Evening, Pete. Looking forward to catching up on this. Great work as always. Sadly got to sleep. No, thank you for being here for the time that you were. Really do appreciate it. Jacinta. I wish to purchase a portion of a share of Tesla, Amazon or Etsy, but Hargreaves Lansdown will not allow me to do this. How can I purchase this? Right, so with Hargreaves Lansdown, you can't buy fractional shares. You have to buy a full share. So that is a downside with Hargreaves Lansdown. So if you want to access fractional shares, the only thing you could do is use an alternative. So you could use free trade, you could use Stake, They're all US stocks, aren't they? Yeah, Etsy is a US stock. So you could use free trade, you could use stake. They will allow you to buy fractional shares, but you can't buy fractional shares in Hargreaves Lansdown. You have to buy a whole share. So that's the only downside with them. Thanks for the answer, Pete Bobo. This is kind of how I see Gov raising some more money. Okay, Fabio. Hi. I'm in a position to pull a significant amount of money from my company share scheme tax free and move these into an ETF. My firm is in a strong position and has steady growth year on year. Any advice? Okay, so depends on how much you're looking to pull, mate. I mean, I think for you, if you can get it out tax free, fantastic. If you're going to go put it into an ETF, well, you really should be looking at putting it into another tax efficient vehicle. So ISAs, pensions, that kind of stuff, depending on what your access requirements are. Because I don't know any more, your placement is really important, and where you begin is very, very important. So tax efficiency first will be the first thing that I'd say to you. But really, if you're taking a significant amount of money out, then you really should be looking at trying to get some professional advice. Really look at getting some professional advice to make sure that you're putting it in the right place. I don't know what numbers you're looking at here or what size of numbers you're looking at here, but you can only put a limited amount in, say, things like your ISAs, right? So and it also depends on your tax bracket. So if you're a higher rate, additional rate taxpayer, then there may be some other tax efficiency considerations that you want to bear in mind, which is why I'm saying you probably want to go and see a proper financial advisor to help you on the tax efficiency side, just to make sure if you are pulling out a significant amount. Now, I don't know what you mean by significant amount. If it's six figures, then you definitely should go and see somebody, because there's lots of stuff that you can do to help you make sure that you're not paying as much tax if that is going to be important to you. I don't know whether it is or not, but that's just something to think about. And that's what I would say first, but tax efficiency is going to be very, very important in that regard. Darren, hey, is cannabis something that you see the most potential in? Is what I wouldn't say the most potential, probably something, and Darren's part of the members group, by the way, so welcome, Darren. I wouldn't say the most potential, but I definitely see potential in it. Definitely if it gets legalized across the states, it's a massive, massive market, so definitely. And if it gets legalized in other territories across the world as well, then yes, it will be. But it's definitely one that I've got my eye on at the moment, definitely. Okay, Bill Pashan. Pete, is it a good idea to deposit more money in a pension fund via salary sacrifice to save more tax? If not, how can you save tax on salary income? Salary sacrifice is one of the best ways that you can do that, mate, to be honest. Because it's going to come out of your salary before tax is actually taken. So you get that benefit there. If you have got the ability to pay via salary sacrifice, I'd definitely say it's worthwhile doing it, particularly if you want to reduce your tax at source. It's a very good way of actually doing that. Hemi, do you believe investing in S&P 500 is a good decision, or is there too little innovation in it long term? Furthermore, how do I decide which of the many S&P ones I invest into? Look, the S&P 500 is the biggest index market in the world. Like, it is the biggest in the world, mate. Like, those 500 companies are the most successful, biggest companies on the planet. So, lack of innovation, I wouldn't say that, mate, because if you think about global markets, tech, all the tech giants are American. There's a lot of innovation going on there. I mean, SpaceX, Starlink, right? There's so much innovation going on there. I think the most important thing is, right, and we get excited about the S&P 500 because it is the biggest market on the planet, right? It is, irrefutably. But when you're investing, the question will be, like, if you're investing long term, yes, you obviously want exposure, but you don't want to put all of your eggs in one basket, surely. So global exposure also becomes really important. Can you invest in Europe? Can you invest in emerging markets? Can you invest in Canada and in other places as well to help you diversify? Because if you put everything in the US, and God forbid anything were to happen, like, we don't know that it will, but what if it did? You don't want all your eggs in one basket. You don't want all your money in one place, concentrated in one market. So diversification is going to be really, really important. Again, you need to make sure that you understand the risk that you're going to take if you're going to do that. But Is S&P 500 a good decision? It's the biggest market on the world, mate. Nobody can ignore that. Nobody. Investment houses can't ignore that. So is it a good place? Absolutely. But I think diversification is really important as well. Lewis, great video, Pete. Keep up the good work. Any good books you would recommend to read about investing? Just about finished Rich Dad, Poor Dad. Cheers. There is one up here. I reference it all the time. It's called How I Invest My Money. One sec. This one's really, really good. It's got some really good themes in there. And I've got a friend who actually contributed to this book as well. But it's one of the first ones that is written by finance professionals. And it's interesting to see the theme of how they invest their money, what they actually use, and how they balance that with some of the other things that goes on in their life. It gives a very, very unique view into how people think about investing and go about investing based on their own personal lives and their own personal situations. It's very, very interesting. So I definitely recommend reading that. If you're following me on IG, I've actually got a link to some of the books. There will be a link in the description to this as well. So definitely go check that out too. Okay, cool. So Kevin, Liverpool worst, mate. Mate, let's not talk about Liverpool. I'm a United fan, and one of my mates is a Liverpool supporter. I don't taunt him about it because I'm not that kind of person. But they were so confident at the beginning of the season, and I'm sorry if you're a Liverpool supporter. But listen, you don't know what's going to happen in football, so you just need to kind of stay a little bit humble sometimes, and that's all I'm going to say. And like, we're second right now, or maybe we'll be second right now. We might end up fourth. We might end up fifth. You never know what to expect with United. But yeah, the whole Liverpool debacle against Everton, I did have a little bit of a smirk on my face. And I'm sorry if you're a Liverpool supporter, you get offended by that. But, you know, these things go around and, you know, it's football for you. It's part of the joys of it, right? Roller coaster. It's kind of like the stock market. You know, you have a good period, you have a really, really poor period. And I think they're going through a little bit of a slum right now, unfortunately. Just enjoy the ride. That's what I'm going to say. Enjoy the ride. Where are we? Lickety Split Digital. Nice. Hey, man. Great stream. Please, can you turn yourself up a little bit? Yeah, absolutely. Guys, you should have said this earlier. Is that okay? That should be okay now. Jake Orton. Amazing work, man. I just want to say thank you. No, thank you very, very much. The Legit Gaming recommend stock platforms. Are you asking me to recommend a stock platform? When do you mean to purchase? We've spoken about, you know, Trading 212. Well, they're not opening accounts right now, but Trading 212 is still legit. Free Trade, eToro, Stake, Orca. There's just a handful right there that you can actually use that are still opening accounts. Only Trading 212 isn't at this point in time. Jake Orton. Hey mate, I've just read The Intelligent Investor. That helped me so much. That's a recommendation for Lewis. AW Music. Hi Pete, I just opened a Vanguard Stocks and Shares ISA. Have set up 4K into a Life Strategy 100 and 1,000 into a global small cap and added £3 and £100 a month respectively from now. Does that split make sense? I don't know your personal circumstances, so I can't say whether it does make sense. I think the biggest question is this: do you feel comfortable with that? If you feel comfortable with it, then fantastic. That's the main thing that matters. If you feel comfortable with it, fantastic. Because I think what you've got there is, if you've gone into the Life Strategy 100, that's full equities. That's all in the markets. It's a little high risk. I question maybe, are you comfortable? Did you do like a risk questionnaire maybe to understand what level of risk you sit at? I mean, I don't know how old you are. If you're young, then you can afford to. If you're a little bit older, maybe there might be a question as to whether you can afford to take that level of risk. So there's a number of considerations there. But, you know, you'll be in a 100% equity fund there. Then you've got global small cap. I wonder, is that all equity? That might be equity as well. A little bit diversification maybe. I don't know. That may be a question. Did you require any bonds or any diversification in that portfolio? Those are just a couple of thoughts that I have, and those are the kind of things that I go through with people on coaching as well, right? So if you're going to go and open like a Vanguard and you just kind of wanted to know what you're looking at, right, what does a bond mean? What does, you know, the life strategy 100% actually mean in terms of the equity exposure? Where do you sit on the risk scale, for example? Are you comfortable taking that much risk? Do you know that, you know, it could be quite volatile because you're in a 100% equity fund? And are you prepared for that kind of volatility? Those are all the kind of things that I go through on coaching with people, because I often find that sometimes people kind of just jump the gun a little bit, invest because they're enthusiastic, but they don't like it when the market goes down and they start to rethink and re-guess, and then they become unsure. And the whole point of, you know, this channel is to kind of help you guys make a decision without having to second guess yourself, so you understand, you know, how these kind of portfolios basically work, what it means when you're 100% in equity, what it means for the fact that it will be very volatile, so it will go up and down quite a bit, how you're going to prepare your mind for that, whether you're going to be okay with that. Those kind of things are really, really important. So I don't know, does it make sense? I think it makes sense to me, looking at that, if you're prepared for the volatility, if you're okay with it going up and down and you think that you can handle that. That's what it would make sense to me. If you're not sure about any of those, then I would say it wouldn't make any sense, or it doesn't make any sense, because maybe there are a couple of things that you may have missed. But again, I don't know your circumstances. We've not had a conversation, so it's hard for me to gauge. Let's have a look. Novus. Just realised that he wrote the same question twice. Okay, let me just see how far down we are here. Bear me 1 second. Adrena, sorry, Adrena, I missed your super chat here. Thank you. Would you keep XRP on your portfolio? So I've got XRP right now. Let me just fast track this one. I do have a little bit of XRP. They're going through a little bit of issues at the minute. A lot of things are going to stem on what's going to happen with this whole court thing. Is it worthwhile keeping for a punt? If you've already got it, why not? What have you got to lose by keeping it? If the court verdict is, you know, positive in terms of the share, the price of an XRP coin goes up, then you're laughing. If it doesn't, then you've lost nothing at all. But just be mindful that if you do hold some stuff, it could go down. So you just need to watch it quite closely, I think, just to be sure. But yeah, I've got a little bit of XRP. I'm holding it right now. I don't have a lot though. I've literally only got a little bit, a little bit. Right, let me just go back up here quickly. Okay, that's quite a lot here. Okay, we're over the hour mark. Right, so let me give this another half hour. Where was I? Okay, there we are. Okay, so there was a question from Jacobo, which was exactly the same as the XRP question that I've just mentioned, that I've just answered there. Brett Clark, hi Pete. I pay in the max amount to get the max company contribution into my pension. Would you see a lifetime ISA as being the next best savings for retirement? I like getting something for nothing. Yeah, I mean, I always say to people, if you can max out, you know, your pension contributions at work, then absolutely do that, because it's free money that you're leaving on the table if not. A lifetime ISA can work, and a lifetime ISA does have benefits, because you don't have the restrictions that you have with pensions in terms of the access. So you can access a lifetime ISA a little bit earlier. So you've got the benefits there. I would probably just argue maybe doing a little bit of a comparison, because with a lifetime ISA, you can only put in £4,000. So if you think that that's going to be ample, then absolutely use it, but also have a look at the cost as well, because with pensions, workplace schemes specifically, there is a cap on how much providers can actually charge you, and with a lifetime ISA, you might not have that. So it could be more efficient for you to pay into the workplace pension anyway, keep your costs lower than paying into a lifetime ISA where the cost could be a little bit higher. But just bear in mind that obviously with your workplace pension, 55 is your limit for access. If you're likely to need money or access to that money, then a lifetime ISA might be a better alternative for you. It's hard to say without really knowing your full picture, but that's just a few things maybe to think about. Jay Corton XRP just mentioned that. Hemi, for someone that wants a very safe ETF fund to have money in for sole purpose of coming on against inflation, which one first comes to your mind? There is no such thing as a safe ETF or fund, mate. Whenever you're investing, there's always going to be a risk. There's no such thing as safe. If you want something that's going to be relatively safe, then you need to go into something that has diversification with some bonds or some other asset classes. So maybe if you're looking at Hargreaves Vanguard, for example, you will probably have a look at the life strategy with the 20% equity exposure, because then you've only got 20% in equities, the rest is all in bonds. But that's probably as safe as you're going to get, and it's not really safe because you still have the risk of it going down in value and walking out potentially with less than you walked in. So there is no such thing as a safe ETF or fund. But something like a life strategy 20% option would be something that you could look at as a barometer. I'm not saying go and buy that, by the way, don't take that as advice, but you could use that as an example of where to start. So if you're looking at a number of providers, you want to go for the one with the least equity possible. Okay, Daniel Smith, thank you for your reply to my message about Fineco and referral. I wanted to ask you how you feel about stock screener tool and how it comes with and how it compares with Finviz, for example. I've not looked at Finviz, so I wouldn't be able to tell you or give you a direct comparison. I know I do like the stock screener in Fineco, purely because it's very, very simple to use, and actually you're getting access to that as part of your bank account. I think it's really, really useful if you just want to be able to centralize your stuff and not have to have like 6 or 7 things open. They give you like one place to do the entire thing. I find that their stock screener was very, very easy to use, but I haven't used Finviz, so I wouldn't be able to give you an example, a comparison, I should say. Roy, voted for you, Pete. Thank you very much. Thank you very much. Everyone like the stream up. Angel Ed, hey Pete, what are your thoughts on bonds? Bonds are good. Bonds are a great diversifier. If you're looking to invest and you want a little bit of security, they're probably the safest you could possibly go. I mean, with bonds, you have a known outcome from the beginning, pretty much. You need to bear in mind, obviously, that you've got corporate bonds, you've got government gilts, so lending to the government. So depending on which one you choose, you're likely going to have different returns or rates of return. They call them coupons. They'll be different. But if you just want to invest and be a little bit safe, they're a great place to go. Bond yields aren't that great right now, though. So they're good when they're used in conjunction with things like equities, but there's nothing wrong with investing in the bond. If you can find like a 2-year fixed rate bond, or you can find a bond fund specifically that might have investment grade corporate debt in there, maybe those could be good options. But make sure that you do your research. Really, really important. Very, very important. Valentina, so what do you think is the best investment in at crash if it happens? What about the Pacific, China, Japan and bonds? What do you think is the best investment in a crash? Best investment in a crash? Well, if you're trying to come out of a crash on the positive side, then you need to be in the equity markets, really, because that's where the big opportunity is going to lie in a market crash. You need to be in the equity markets. Now, whether that's going to be in the States or emerging markets, Asia Pacific, China, that really depends on what your risk appetite is, and you know how much you want to give it a go. Again, it's all about global diversification. Yes, we've spoken about the S&P 500 here, which is the US market. But if you have a global crash, then there's opportunity everywhere. It's really about what your risk tolerance is going to be. So I wouldn't say that there is one in particular would be the best one for you. It really depends on what your risk appetite is and what you're willing to basically stake for the opportunity to get better growth on the way out. But you definitely need to be in the equity markets. You might, with bonds but bond yields are so low right now. So are you likely to see a move toward bonds with bond yields increasing in value? Probably not. I think the opportunity will be in the equity markets. Diana Mack just voted. Keep up the great videos. Looking forward to the side hustle videos. Thank you. Cheers, Diana. So that's good to know, because yeah, that's in the pipeline at the moment. I've actually got a podcast episode coming out in a few weeks, specifically on Amazon, because what's his name? Dean was on the podcast. We recorded actually before the new year, so that will be out in the next couple of weeks. So watch out for that on the podcast. What we got here, Kevin. Pete, when everything opens back up, are you looking to get back into FA game, or could you officially be a YouTuber now? No, you know what? Financial advising the game. No, I don't really have that much desire to go back into advising. The whole reason why I started doing this in the first place is because, you know, since 2000 and when was it? 2000 and where are we right now? 21. So about 2016, I've been thinking about doing, you know, financial education, because I learned so much coming through like Canary Wharf and the banks and all this kind of stuff. And I thought, surely, like, this should be widely known. Like, what I know and what I picked up should be widely known. So this has been something that I've been sitting on since 2016. So when everything goes back to normal, I don't really want to go back into financial advising. I like the fact that I'm agnostic in terms of, like, I'm not asking you guys, or I'm not doing this because, you know, I've had a number of coaching meetings over the last couple of weeks where people have got some serious cash, like 23, 22-year-olds with like 5-figure sums that I never would have had at that point. I'm not doing videos just so that they then end up with me so I can go and invest their money for them. I really just want to be able to be the person who provides information and education. That's it. I might have, you know, tie-ups, for example. So if I do come across someone who does actually need some help and needs to see a financial advisor, I know a ton of people that I can introduce you to. So, for example, I can say to Ashley, for example, he's a financial advisor. Go and see Ashley, who will look after you. I refer quite a bit to my old colleague, Terry. He's a financial advisor now. He's used to be an investment manager, managed £200 million for one of the big investment houses. So if someone really needs it, I could introduce them to him. But I have no desire in doing it myself, really. I just want to be the voice that provides a little bit of education that is agnostic in that way. There's Ashley for you there as well. Cheers, man. Andy Turbo, hi Pete. I'm watching the travel industry right now. Your thoughts, please, on investing now in EasyJet, Carnival, National Express. Past performance does make them look like they are worth a punt. Yes. So the travel industry will be like considered like a recovery sector or recovery stocks. That's what you would call them. Could they be good punts? Yes, they could be, but here's what I would say for this, right? Depending on how much longer this carries on, the big question is, do these companies have the financial resources right now to actually survive what's going on? And if this were to extend, God forbid, till next year, do they have the financial resources to survive this? If they don't, are the government likely to bail them out? Now, that is an unknown question. We don't know for sure. But I can give you an example of one that I believe the government would never let fail, and that would be someone like British Airways, right? Not on earth would the government, I would hope, touch wood, the government would never let the likes of British Airways or AIG, for example, to fail. So I tend to look at that as one of the main things that I would look for in recovery stocks. Yes, they'll be worth the punt, but there are so many variables here. If we end up like this in 2022, still in lockdown, is EasyJet really going to be around? Is Carnival really going to be around? Is National Express really going to be around? They might be, but under what guise are they going to be available already? Is it off their own back, off their own steam? They've been able to raise money, or is it through a government bailout? That would be my main concern. So yeah, worth a punt, but it's worth also acknowledging that there is risk involved in that as well. Marilla, yes, about Kathy Woods. Okay, so I'm just looking at time, guys, and I'm just really, really conscious of this. I'm going to try and speed through as many of these as I possibly can. Okay, so Andrina's just put in another super chat here. Thank you for your advice. And Dogecoin. Dogecoin is a weird one. I had a little bit of Dogecoin. I got rid of them. I've now put it straight into Bitcoin. I don't know. Dogecoin is just one of those ones where it's kind of like, I don't know. We don't really know what's going to happen. I may actually kick myself if Dogecoin does really, really well for selling and going into Bitcoin. But I don't know. Dogecoin, it started off as a little bit of a joke. So you never really know. But it would be really ironic if they ended up being top dog. I just don't see it happening. I think they could do well, but I just don't see it happening. Well, let me just retrack to where I am or where I was. T Squares just said on here they are all on eToro. ArcG was added on Friday. I didn't know that. Actually, I've got an eToro review coming next week. Actually, next Friday. So I will definitely go and have a look at that. Thanks for that, mate. I did not know that they were all on eToro because they've been notorious to get into. Fantastic. Good man. I learned something tonight. Thank you. Jacinta. I wish to purchase a portion of... We've already answered that, right? Yeah, because that's where we talked about the fact that you can't buy fractional shares with Hargreaves Lansdown. You've got to buy a whole share. So alternatives like Trading 212, Free Trade, Stake, Orca. No, actually, Orca's UK, so you can't use Orca for that. But alternative ones you'll be able to get fractional shares with. Was your last... Kevin, was your last work anything... The Wolf on Wall Street, probably my favourite stocks movie. Was my... I wouldn't say it was like that, to be fair. It was certainly interesting in Canary Wharf. Really, really good time. But yeah, Wolf on Wall Street is one of my favourite stock market films. I'll tell you my favourite one, though. My favourite one is The Big Short, followed by Margin Call. Those two movies are, for me, gold. There's a series right now on Sky, which we ended up picking up, I think it was on like Thursday night or something like that, called Devils. That's about the stock market. That's about investment bankers, essentially. Shot in Canary Wharf, took me back, because like just watching some of it, my missus must have been really, really annoyed with me, because I was just saying, oh my God, Canary Wharf, I've not been down there for such a long time. But it's like, just seeing it on camera, and it took me back to the days working there. It was just a great, 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 great time. Steve, voting done. Thank you very much, mate. Kevin, you can buy the iShares Automotive ETF in Trading 212. Automotive in what? Okay. I didn't know that either. Okay, good. That's good to know. Hey, mate, got a lot of shares from work with Save As You Earn. They've held a nominee. They held in a nominee account, yeah? Shall I leave them or move them into an ISA? If so, which one, as most have high cost and want to keep the shares? So this will be shares in your company, I would imagine. So you would need to speak to your HR teams to make sure that you can actually move them out. If you've been awarded them recently, some of them will actually say that you have to hold them for a period of time and they have to be held in that nominee account. Because a lot of them will have clauses to say, well, if you left after, I don't know, a year or so, you forfeit them. Or if they might have a 3-year gap, for example. So if you leave within 3 years, you might only get half or a proportion of them. So it's worthwhile speaking to your HR, mate. L-Boy's asking here, on the new tax year, does the ISA deposit limit reset? Yes, it does. So the tax year runs from April the 6th each year to April the 5th. So April the 6th, 2021, a couple of months' time, you will find that the ISA allowance will reset. So you'll have a fresh £20,000 deposit, assuming the ISA limit isn't reduced in the announcement. I don't think it will personally, but yeah, it resets every year. Great content, by the way. Got me thinking about long-term finance since start of lockdown. Fantastic. That's music to my ears. Novice, what do you think about the iShares Global Clean Energy ETF? Their main holdings Plug Power around 10%. Anything in clean energy, that's, well, Biden-Harris administration is good for clean energy. So if you're in one of those right now, pretty good buy. I think they'll do really, really well in the next 4 years. They'll still obviously be quite volatile, but yeah, the Biden-Harris administration will be good for clean energy. Bobo, you can also get fractional shares with Revolut. So Revolut, people have asked me to review, and I've not got it on my list. I'll put it on my list as well. Revolut. There are so many out there. It's just like finding time to get round to them all. Canal P, love your channel. Would you ever do videos around fixed income and fixed income ETFs? I can do. Yep, I absolutely can do. Up until now, and this is the issue with YouTube, and this is a little bit selfish of me, but I'm going to explain it anyway, and hopefully you guys will understand it. So when you're trying to grow a YouTube channel, you just can't make content that just willy-nilly. And there's so much stuff that I would love to talk about that just won't get pushed, recognized, and will probably do harm to the channel in terms of YouTube pushing it. So every time I upload a video, if the video doesn't trend above where it was before, i.e. being pushed to more people, and through more people being pushed to more people viewing it, YouTube then looks at it and thinks, oh, the the video is rubbish. So if it doesn't have any good, if it doesn't have a good number of comments, if it doesn't have a good number of likes, then those are all red flags to YouTube to say this video isn't doing really well. They stop showing it to people. So where there's a lot of content that I do want to make, that I want to start making, I'm very conscious of that, because if I make videos that don't get viewed, don't get comments, don't get liked, YouTube will stop pushing the videos, then eventually stop pushing the actual channel. So it's always kind of like a balancing act. The question is, would I make videos around fixed income and fixed income ETFs? Yes, I would, but it would depend on how much people are actually searching for those videos or that keyword, that topic specifically, because otherwise I'll make it and possibly damage the channel and the growth on the channel, which is why I'm so adamant that I want to get to hopefully 60,000 subscribers this year, because at that point it doesn't matter what I make, because naturally I know that there will be enough people watching it, liking and commenting to basically almost nullify the effects or the benefits of the YouTube algorithm. And nobody really understands how the algorithm works, but that's been my observation of the YouTube algorithm over the last year. My most popular video is Trading 212. So of Trading 212 and the 19,800 subscribers we're on at the moment, that Trading 212 video has contributed about 6,500 subscribers to that count. So the channel gets ranked and known for certain content and pushed to people that are looking for that content. So it's finding the balance between the two. I hope that makes sense, but that's what goes in my head when I make videos. It's all about making sure that I can get the channel to a point where it's almost self-sustaining, so I can actually go out and actually make the videos that I want to make and not have to worry too much about having to rank for keywords or certain subjects or titles. Okay, Jason Baxter. Let's have a look. When I'm currently looking at the value of stocks at the moment, I feel a lot are super inflated, and I fear I will be stung heavily when stocks get back to normal. Any suggestions? Yeah, mate, listen, isn't that the story of it all? Look, I don't think that anyone can say that there aren't that we're not in some kind of bubble right now, and I think it's almost like a perfect storm. Interest rates are low, inflation is where it is. So where else do you go? You go to the stock market, and with the demand of people wanting to make their money work harder, with more liquidity in the market, focusing on, you know, let's face it, some of the really big companies, Amazon, Tesla, all those guys, then yes, you are absolutely going to have stock prices that are inflated, creating a bubble. What do you do as an investor? Well, if you don't invest and you wait for the stock prices to come down, you could be waiting for a very, very long time, because that stock price may not come down. It may just continue to surge as more and more people look for investment opportunities to make their money work harder. So I guess, you know, it's hard for me to say what you should do and give you any suggestions on this. I think really you have to be comfortable with what you're buying, even if you are buying it and it's overvalued. Tesla is a prime example, massively overvalued. I think last week was the first time in a very, very long time that that stock price went down to like below $800 in a very, 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 very long time. I'm just looking at it right now, and it's at $787. I mean, I remember like 3-4 weeks ago it was $880, so that's $100 down. So the question is now a good time to buy Tesla? It's still overvalued according to the analysts, but based on where it's been over the last month or so, is it a good time to buy Tesla? Many people will argue that it is. Many people will put price targets on Tesla specifically below the $800 mark. I know a few people that have. So they'll be buying right now. I think with everything, you just have to be comfortable with what you're buying and comfortable with the price that you're paying for that company. Ultimately, it all boils down to, do you believe that if you buy it at $781, for example, for Tesla, do you believe it's going to be worth more in 2 years, 3 years, 4 years' time? If you think that it will be more, then that should tell you everything that you need to know. D10, hi Pete, is it worth upgrading my free trade account to Plus If so, what's the advantages? Cheers. With the Freetrade Plus account, you just get access to more stocks, and you get access to some of the tools as well. I haven't done a full review yet on Freetrade. That's on my to-do list in the next couple of weeks as well. I've got to do eToro first on Friday, so probably will come maybe the week after that, I would expect. But yeah, if you do the Freetrade Plus account, you just get access to more tools and information and to more stocks and stuff. Sabira, I have a question. As a new investor, would you recommend investing in buying a house and doing the BRR method, or investing in stocks? Oh, mate, really good question. I can't recommend one over the other, mate. I mean, it's really going to be down to you. What do you want to do? Right, property certainly has its own benefits. The stock market has its own benefits. You kind of have to gauge where you want to begin yourself. I mean, investing in the stock market is very much a long-term game, right? If you're looking to invest in property, looking to flip that round very, very quickly for a profit, then you're going to have the benefits there. You obviously need to be mindful of the tax position in properties. But as long as you're aware of all the pros and cons, it's really down for you to decide. I can't say do one over the other. It's down to what you want to do, mate. It's almost an impossible question for me to answer. All right, okay. So let me just give this another 5 minutes or so. I'm just going to see if I can catch another 2 questions in here. There are so many. I'm sorry, guys, if I haven't got to them all. There are so many of you, and there's so many messages, like literally waiting. So I do appreciate you. And again, we'll do this in another couple of weeks' time. So the next one of these lives is going to be, it might actually be the Pension Bee one. Is it going to be that soon? Yeah, it is going to be the Pension Bee one. So the very next live that we do is going to be the pension specific live Q&A. So just heads up, guys, I won't be taking any investment questions specifically on that session. It is literally dedicated to pensions. So if you've got family members, friends that are skeptical about pensions, are completely in the dark about pensions, don't know whether it's worth it or not, that would be one to invite them to. So the next investment one that we're going to do is going to be on the 21st of March. The 7th is going to be dedicated to pensions specifically. And by the way, I will be doing very specific live sessions throughout this year. So one of the ones that I have got lined up is a live session on property and investing in property specifically. I'm going to have a live session that's specifically for crypto. So I'm going to be bringing in experts on those things exclusively. So on those ones, I'll obviously let you know when they're coming, so you know in advance, so you know that that's going to be the focus, but they will be targeted towards those topics specifically. So it won't just be a general Q&A where I'll be taking investment stuff or investment questions. There is a question. Cheat codes. All right, let me just get to cheat codes. I've just seen 16 years old, so I'm going to go straight to this message right here. Any basic tips for investing in the future as a 16-year-old? Sorry if it's too vague. Listen, mate, if you are 16 and you're looking to invest in the market, I mean, you can't right now, but here will be my advice for you, mate. First and foremost, in the next 2 years or so, make sure you try and get as much foundational knowledge about investing as you possibly can. Think about, watching videos on investing, reading books on investing. If you've got any workshops, free workshops you can attend, follow some people who talk about investing. Get as much knowledge under your belt as possible. If you're going to get your first job, this is the thing that I wish that I did when I was 16, or even knew about when I was 16 that I didn't, right? If you get paid on a monthly basis and you get paid X amount, take 10% of that and invest it in the stock market. The rest of it, do whatever you want with. But make sure that 10% you just invest in the stock market in whatever way you choose, whether that be individual stocks or index funds or whatever. Once you've got the knowledge, you will know exactly where to go. Just do that. If you do that and you start that at 18 and you do that consistently throughout your life, believe me, you will have options when you get to my age, when I'm 41 right now. Believe me, you'll have so many options. It will be unbelievable. So that will be my advice to myself if I was 16 right now, and I've just given it to you. Right, let me take one more. Let's see what we've got here. Jesus Christ, there are so many. Oh my God. Okay. Really, really sorry, guys. I'm just down at the bottom here. So there's one from Ripley. I'm 18. Your advice has really helped me. Thank you very much, mate. I thought there was going to be a question attached to that. Let me just pick one more. Let's go with someone I haven't actually seen already on here. Adam Tilston. Do you use EMA, SMA, and RSI? If so, what period do you use for each? Right, so, mate, that's a big question for me to answer right here, which I want to get off. So message me on IG, and we could talk about it on IG specifically. Wanted to get something that's really, really short. John Tom, eToro, a good platform. Pretty good. It does have its limitations, though. There are some stocks that aren't available on there, but a really, really good one. I've got a review coming on Friday specifically for that. Guys, I really do appreciate it. It's been about an hour, almost 20 minutes now. Just as a quick reminder, guys, I would really, really, really appreciate your support on this award nomination. I will pop the link down below as well. By voting, you will basically be entered into a prize draw to win £1,000 as well. If you have different email accounts, I don't think there's any prohibition on you voting a number of times as well. But I really, really do appreciate it. Thank you so much for spending this time with me this Sunday evening. Yeah, I'm going to get an early night because, well, actually I can't get an early night because I've still got some work to do, which is one of the reasons why I do actually want to get off, because I need to post the podcast for tomorrow morning and just finish off some editing there. But thank you so much, guys. I really do appreciate you being here. We'll see you on Tuesday for a video, and then on Friday we've got eToro review. But if there's any questions literally that I haven't answered here this evening, I do apologize. There are so many of you now. I try and get through as many of these as I possibly can. It can be difficult sometimes. If you message me on IG, I will respond there, but I tend to do IGTV lives. So I answer the questions as and when they come in. I probably get between 15 to 20 a day at this point. Some days I get 25, so it's a lot. But guys, thank you so much for being with me. I will catch you later on.